Central Bank Week was always going to be a volatile week, and the markets did not disappoint. Utilities, material, consumer staples were the hardest hit. Energy, communication services, and consumer discretionary did relatively well. The crypto market was down across the board, with global crypto market cap decreasing 2.54% to $1.16 trillion. The next FOMC meeting is in 28 days, and there is already a near 80% probability of a 25 basis point increase in the federal funds rate. We can see the federal funds rate is currently at 5.07%. As Jerome Powell reiterated, the labor market is still very strong, but it's seeing some signs of easing. The unemployment rate is at 3.7%. As we covered off a few days ago, the central banks are not done with tightening, and Fed policymakers expect rates to rise at least 2 more times this year. Those rate increases are to avoid another inflation outbreak like we saw in the 1970s. It was choppy trading in Nvidia as the US planned more restrictions and curbs for AI on China. Nvidia is squarely in the target as the US administration is planning new AI chip export controls. Artificial intelligence is definitely the future. The stock markets around the globe are being buoyed by AI. China is still behind the US, and the US wants to keep it that way. It's very important to know where the safety nets and ceilings are inside market action. What we saw was Nvidia dropping, and when Nvidia actually dropped, it dropped down to an SL or a Stanfield level. These SLs are strong buying areas when price is above that particular SL. The thicker the SL, the stronger it is. The more SLs there are, the stronger the support inside the market. One thing that we saw, Nvidia was actually trading down below this 402 level in pre-market. But what actually occurred, there was a strong amount of smart money buy support, and we saw that reverse as Nvidia opened. This is why it's so important to know where smart money is buying and selling. After the main market closed today, the Fed revealed its stress test on 23 banks. The stress test determined that large banks are well positioned to weather any severe recession, if that should occur. Meanwhile, in Australia, inflation is cooling down. That's taking pressure off the Reserve Bank of Australia to raise interest rates. Something that's really important to understand, when you see headlines like Powell says Fed's inflation fight could take years, that's already been baked into the numbers. We've already been covering this for quite some time. Trading and investing can feel emotionally like you're on a roller coaster, but not in a good way. To get off that roller coaster, we understand that the market pays us when we're in synchronization. Other people don't pay us, the market pays us. And if we're out of synchronization, we pay the market. It's so important to think differently. Professionals look at the CTKS structure of the markets. They understand the Tier 1 charts are the global engine of financial markets. They're always seeking if that engine needs a tune-up. Professionals know that the majority of traders and investors lose money because of mindset. It doesn't matter what industry or sector you're investing or trading in, it's mindset that makes the difference in profitability. Mindset can be your greatest ally or your greatest problem. Professionals know that price is always moving in a wave. That is Rule 4. We abide by Rule 621, buy on red, sell on green. Rule 723, master fear, is incredibly important. Acting on fear has you buying and selling at the wrong times. To combat fear, we must know market structure, and looking at total crypto market cap, we saw that we were very, very close to taking out that $1.153 trillion mark. What happened? We didn't make it. We went instead to the next SL, which was down at that $1.127 trillion mark. especially when the Stanfield levels are very strong like what we're seeing inside total crypto market cap. If you don't get above 1, you're going back to the one below. Inside the CTKS Method service, there are 27 videos, and each one of those videos I discuss possible bullish and bearish price projections out to the end of the month. I also explain how you can interpret those SLs. It's really important viewing. There are 27 videos inside the CTKS Method service, and we expected turbulence around this particular period of time. Movements in price have a way of completely freaking people out. That's why we must look to CTKS structure. The structure of the market is where all these SLs are hanging out together, and you can see price is always rebounding between them. We've seen recently that the SP500 is coming down, but where are smart money buying and selling? We saw that there's a huge smart money buy area between 43.48 and 43.57. What are we now witnessing inside the main market? And this is the S&P 500, marked up with the CTKS method since 1871. The market is recovering. The NASDAQ is also at significant territory because we can see at this 13,623 level, if the NASDAQ gets above that particular level, it's currently 13,591, so it's not far away from it at all. If it gets above 13,623, it's going to convert smart money resistance to smart money support. The reason that we mark up charts with the CTKS method, we must understand where the ceilings are and where the safety nets are. And when we look at Bitcoin, what do we see? There's quite a few ceilings, smart money sell areas, one at 31,000 and one at 31,200. Bear these in mind. Bitcoin has been having a lot of trouble getting above those two smart money sell areas. Bitcoin is currently $30,054. If the sellers take control, we would be expecting $29,250. And we can see we've got a lot of smart money support down here. That's a very good thing for the crypto market. I would suggest at the current time in the crypto market, keep your eye on total crypto market cap, and you have an indicator inside the CTKS method service. Final GDP quarter-on-quarter and unemployment claims is coming out inside the US a little later on today. The core CPI for Europe is coming out tomorrow, as well as the core PCE price index tomorrow as well for the US. Therefore, expect incoming volatility. Looking at the greatest gainers in the past 24 hours, BIT, Leo, and then we get a lot of stable coins. Please let me know in the comments, what does that mean? It means something very specific. Active learning is a critical thing to do. The greatest losers in the top 100, Conflux, Pepe, Nia, Gala, Mina, Optimism, Uni, Sui, and Aave. To become a consistently profitable investor or trader, you must master fear. We do that inside our global family, 16,000 people strong, spanning the globe, through positive excellence. It would be really good to talk about this inside the comments. Why do you think positive excellence is so important for your profitability? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.